in July 2020. We started in July 2020 on this alternative finance learning lab in order to introduce the topic of tokenization, because we saw, of course, from many industry developments that DLT, blockchain, tokenization was gaining traction. Since July 2020, many things have happened. And this is what we want to share with you today with a real case study, a real implementation. So with this, I'd like first to introduce our panel of today. And rather than me introducing them, I suggest we hear from them immediately. So Ian, shall I ask you to introduce yourself and Accelerated Payments, please?
Hi, André. Very nice to be here, and thanks for the opportunity. I'm the founder and CEO of Accelerated Payments. We are an invoice financing company based out of Dublin, Ireland. We've been going for some 4 years now. We operate in Ireland, the UK, the US, and Canada, and we are an originator. And since inception, we've funded circa 600 million euros worth of invoices across those 4 countries.
Great, thanks, Ian. Nils, may I ask you the same?
Yeah, thank you, André, and likewise delighted to be joining today. So I'm Nils Behling. I'm a co-founder and the CFO at Tradeteq. We're a London headquartered fintech that is focused on building technology for bank asset distribution with a specific view on trade finance. So we build technology that allows originators of trade assets, such as banks, but also non-bank originators, to very efficiently connect with non-bank investors or other banks and interact and transact with them through our platform. And we started in London just over 5 years ago. We now have offices in Vietnam, in Singapore, in Dubai, in Frankfurt, and we work with some of the largest industry participants that are active in trade finance distribution.
Thank you, Nils. And Bill, may I also ask you to introduce yourself and XinFin, XDC Network?
Yes, well, it's a pleasure to be here. So I'm Bill Sebell. I'm the head of ecosystem development for XinFin FinTech and executive director of the XDC Foundation. The XinFin FinTech launched the XDC network back in, or started in 2017 and launched the network in June of 2019. And XDC Foundation is the nonprofit foundation now operating to support the development and the growth of the network. So we have really a worldwide network of participants in the community and within the foundation and XinFin, where we're developing and supporting the technology and what we're doing, as an example with Tradeteq, and the TFD is an example of how we use our technology with existing businesses that are out there trying to help the markets that they're in.
Thank you, Bill. So indeed, this is a session that we position as part of the TFD initiative. The TFD initiative is a community of trade originators, investors, and technology providers aiming to digitize and automate the trade distribution flows. Let me first introduce briefly the TFD initiative, and then we'll jump right into the panel discussion with Ian, Billy, and Nils. So the TFD initiative is there to act as a community of those trade originators, but also that include banks, of course, but also non-bank funding platforms such as Accelerated Payments today, credit insurers and institutional funders, that includes asset managers, and additional service providers like technologies such as Tradeteq and XinFin that are committed to increasing the level of automation and transparency in trade asset and risk distribution. So the focus is really on applying technology to a market that is meant to be growing, because distribution of trade assets and risks are meant to be growing for various regulatory and business reasons. So we're focusing on the originators. That means those that serve corporates, large corporates, mid caps, as well as SMEs, and we're helping them get more funding from the institutional market mainly, but also could be from other banks, through the originate and distribute model. So when we mention originate and distribute, the focus is really of the technology propositions and the market practices that we are introducing are really focusing on the focus is really on the distribution itself, not on the origination, because that could happen through various ways. So what the TFD initiative brings to the community of originators and funders is what we call a technology stack that we are continuously enhancing. And today we will focus on how this technology stack has grown from thanks to the collaboration between Tradeteq and XinFin and the XDC network that XinFin has launched. So focusing on the community and the capabilities, we're definitely focusing on banks, as you see on the right-hand side. We're focusing on capital markets, and this is where indeed we're trying to attract far more institutional funding from capital markets, so new institutional investors that still have to discover the trade finance asset class as a kind of alternative asset class for them, but definitely a very attractive one because it represents the real economy. In total, if you include open account, it's up to $19 trillion asset class, so much to do in that space. And we also work with credit insurers and brokers, of course, which already represent a quite developed market, but also there still way to go to combine credit insurance with capital markets funding. So we have worked together with since some years and developing this community, and you can find the names of the participants and the members of the TFD initiative on tradefinancedistribution.com, where you have all the names of indeed those and additional educational material. If I want to try to summarize the community today, these are the asset sellers, the asset buyers. Some institutions are acting as both sellers and buyers. You have technology providers, service providers, mainly law firms and technology integration firms. And we're working through various associations such as World of Open Account, in particular for commercial finance, factoring, open accounts, and other associations such as ICISA for credit insurance market and ITFA for the traditional trade finance market, as well as ICC. So the community is represented by those members today. You can join if you're acting as an originator or a funder, a credit insurer, a broker. You can join this community and start benefiting from the technology stack whenever that is relevant to you. So definitely many of those institutions are discovering the capabilities, assessing when to start benefiting from them, and some of them are faster than others, which is the case of accelerated payment acting as an originator and taking advantage of the combined Tradeteq XDC network value proposition that we will discuss in the next few minutes. On the website, you also find a series of podcasts about indeed 10, the 11th and 12th one are being produced right now. So a number of podcasts from different members sharing their insights as well as white papers. So do not hesitate to get back if you think this the membership to this community is of interest to you. But without further ado, I would like now to focus really on the insights that Ian, Nils, and Billy are ready to share with us. And the focus is definitely to see a real example of an originate and distribute implementation that takes advantage of the tokenization technology of blockchain and digital assets, which is, in our view, one of the most advanced testimonials we have been working on so far. So with this, I'd like to start with Ian, so you represent a non-bank SME originator. Can you tell us more about what Accelerated Payments delivers to its clients, just to set the scene?
Sure. So, so what we do is we provide funding to the SME community in the various markets that we operate, and we do so on a excuse me, on a selective invoice financing. So that means we will buy individual invoices from clients, obviously where the counterparty is a buyer, and we will fund that receivable on a non-recourse basis. So that's very important. It means one of our key routes to market is to partner with existing banks to fund SMEs that are in some difficulties in terms of accessing cash, and we focus very much on the debtor or the buyer as opposed to the SME itself, which allows us to fund companies that ordinarily would find it quite difficult to attract working capital funding. As I said, we operate in 4 countries, and typically our invoice size is about $15,000, euros, pounds, and our exposure per SME is about 160,000, again, euros, dollars, pounds. The reason I'm on this call is, as a non-bank, we need to fund all of our transactions. So we need to fund our book at any given time, and we need access to the wholesale debt markets in order for us to provide that funding. And that's where the conversation arose with Nils and Bill to see if there was an alternative way of funding that receivables book, and hence the conversation around this afternoon around TFD. It's one of the reasons we're interested in this in particular is it's very expensive to access wholesale debt lines, excuse me, and it tends to be, the market currently tends to like large deals. So large to us is a funding line of 10 to $40 million, euros, pounds, and so it's expensive, it's quite institutionalized. So the alternatives in terms of what we're speaking about today are very attractive for us, and we think it's going to be a critical part of our book on a go-forward basis, where even within the next 18 months, 2 years, we think it will be 20 to 40% of our funding requirements.
Okay, thank you. So that's good to know you're acting really as the originator here. So let's move to Nils as one of the 2 technology providers. So Nils, we have a highly specialized commercial finance audience here, and Tradeteq is working with banks and non-bank originators. Can you tell us more about what Tradeteq does and how you work with your clients?
Sure. As I said in my brief introduction, our focus is on asset distribution, with a specific focus on trade finance, and I think that's really the point to start. Trade finance is a very wide term that comprises, at least in my definition, anything from letters of credit to confirmed payables. Now, you can have a very philosophical discussion whether that then forms one asset class or several asset classes, but let's say for the sake of the argument that it is one asset class. And in fact, we focus on the different segments of this big asset class, helping originators to very efficiently distribute assets. So, and we do that across several products in our tool set. We do that for sort of the core trade business, I would say, letters of credit, guarantees that are distributed from bank to bank typically, or from bank to insurers. We have a product for that, but we also have products for banks that want to sell, or other originators that want to sell to non-bank investors, or non-bank investors that want to invest. That's typically focused on more on the payables, receivables side. And the way that we typically, and I think we'll come to that in a bit, but the way we typically access this market is through repackaging in notes. And that is something that we have done for a very long time, and we can very efficiently, with very little friction cost, repackage trade assets, receivables, payables, let's call it invoices, into notes out of a special purpose vehicle and place them in the market. But in conjunction with Bill and Ian, we have taken this a step further, and we have in fact issued tokens based on trade assets, and we really think and see that that's where the future is. And I think we're going to go into that in a bit more detail, but I think that sort of sets the scene.
Thank you. Thank you, Nils. Billy, you're representing the second technology provider here on the panel, serving originators and investors. Can you tell us more indeed how things stand with XinFin? You joined the TFD initiative back in August. Yeah, please tell us about the role of XinFin in this setup.
Yeah, absolutely. So, XinFin is a hybrid blockchain. We have both private and public, aspects of the network. So we can operate privately with a smart contracts platform, which we created to, have this trade that we did with Ian and with Nils, or, with Tradeteq and accelerated payments. And so really the TFD and joining the TFD, we've been working alongside Tradeteq for the last year to really get to the point where we were able to put this transaction together in September. And I think that, the TFD and the significance of us being part of it as the first blockchain to be part of the TFD, it shows how an enterprise ready blockchain that has all of the components needed to really create these tokenized trades. It shows you how you can really use the technology to really simplify the process. And as a blockchain, we're extremely efficient from an energy perspective. We're also very fast and low cost. So there's a lot of benefits that are going on that, I think from what Ian's talking about in the markets that you're typically operating in, coming into an opportunity to work with the blockchain allows you the ability to really remove the friction that you have in the system, really kind of simplify the whole process through Tradeteq, and then really just have it be very efficient moving forward. So it's an ecosystem that we're really building together with all the participants needed in order to make it happen. And I think that it's important to have all of the components necessary to make that work on an ongoing basis. So, doing what we've done up until this point gets us into a position where now the repeatability of what is in front of us is really much simpler than what it took for us to get to where we are.
All right, thank you. Billy, you also focus on removing frictions.
Yeah.
If we have time, I'd like to focus on this at the end of our panel. But in the meantime, Ian, so you have been benefiting from the combined value proposition of Tradeteq and XinFin XDC network. What has been the key differentiator here to take advantage of tokenization in this particular transaction you have executed in September?
Well, I think the key piece for us is we need to be able to show on a combined basis between the three platforms. We need to be able to match an investor with a particular receivable. That's the end goal, because that level of accuracy, it needs to be 100% and needs to be transparent and available. So that's quite a complex chain from end to end. And I think the exciting piece here is the technology now exists, as we've proven with the transaction, and we processed it again, so it wasn't a once-off. it provides that level of transparency and connected us right through the entire 3 platforms between the investor and the asset or the receivable that that entity now owns. So I think that level of granularity is critical to the entire chain. It's critical to us. We track every single invoice at the individual invoice level. So we have that level of transparency on our side, and we need to be able to connect to platforms that thread that through to the investor, because that's ultimately what the investor wants, particularly to mitigate downside risk, in the event of where there's an issue or a default in some shape or form. That, again, that level of transparency is critical, and technology can really streamline that process. André, that's the opportunity here, and bring that one-to-one connectivity between investor and end asset.
Okay, very good. So more focus on indeed granularity, traceability, keeping the full transparency across the end-to-end transaction and across the originate and distribute processes. That's what I hear indeed. So Nils, what has been the reaction from the market? Is this a specific case to accelerated payments? Do you see other originators interested in benefiting from the tokenization next to the notes issuance?
Yes, absolutely. I think the feedback we had, and both Billy and Ian, you can attest to that, was overwhelmingly positive. And I think it's pretty clear that there is huge potential for this and for tokens, digital assets to fund real world assets. I spoke to the editor.
Oh, we may have lost.
Yeah, I think we've lost Nils. Mm-hmm.
Yeah.
All right, maybe you should.
Nils will come back. Oh, yeah, you're back. Good.
Oh, sorry, I don't know.
There was a freeze. You spoke to the editor.
Yeah, so I spoke to the editor of one of the largest trade finance publications, and she told me that the article they published on this transaction was the most read in 2021. So she was very happy. But beyond that, we see tremendous opportunity here, because the notes are a very efficient funding tool, and we have it down to just minimal turnaround times and really reducing the friction costs. But if I can sort of go back to that chart you had in your introduction, André, with the positive feedback cycle that gets kicked off by getting more funding into the system and then stimulating more growth amongst SMEs. If you think about taking the notes to the next level and reducing the friction costs even more, doing that in a digitized format, doing it through notes and not only non-fungible tokens as we did in the first transaction, but really fungible tokens that can be widely distributed, then this is a very, very attractive proposition. And this is where we want to take it together with our partners, and specifically with XinFin.
Okay, very good. Yeah, we might need to come back to this, because this is really some points there for experts between fungible and non-fungible, but I'm sure we'll have ample time to come back to this point. Billy, indeed, what are your future plans and the vision for XinFin in this particular trade finance space, distribution space?
Well, I think, one of the things that we want to continue to do is develop the work we've been doing within the ecosystem. So we're looking to bring on more participants. This is an open, really, it's an open ecosystem that we're creating here with Tradeteq. And accelerated payments is a perfect example, coming in and playing a very big role in what we're doing. We're all kind of participants within this. And so I think for us, what we're looking to do is continue to develop the technology so it makes it easier for those participants to do it. So with our smart contracts tokenization platform, we made it very simple for the trade or the transaction to happen and to create the NFT, on the first round that we had done. And so with that, we are continually investing in improving the platform itself to make it simpler and easier for anyone to come on and really take part in it as an interface. You really, I mean, for blockchain, we're looking to bring blockchain to the legacy systems that are already operating out there and support the existing infrastructure so that we can make it stronger and better. And that's a lot of what our focus is. So we want to continue to work in that area. And I think that, you know, as you know, Nils has pointed out, you know, there's, you know, we have actually, with the technology, really streamlined a lot of, you know, the processes they're going, and it's an ongoing process. So what we've done initially is really kind of, you know, a version 1 of the tokenization platform, and, you know, the development of that is going to move to, you know, talking about NFTs or fungible tokens, you know, where we have, you know, a stable coin that can operate strictly within the blockchain itself. And so we're not going from, you know, the physical note and having to, you know, do all of the work offline and online, you know, which is really kind of where you start the process. And we're able to really look at how we can get this into a robust environment where it's really simple on the digital side. As Ian had mentioned, you know, it's made things very simple or a lot easier with, you know, all of the components that you have to bring in. So we're trying to eliminate any of the manual components with blockchain and really make it a very robust environment. And I think that that's something that we have very clearly roadmapped out, and that, you know, we're looking towards implementing within the, you know, coming 6 to 12 months.
Yeah. Okay. So I hear definitely the ambition to move from NFTs to fungible tokens, and from fungible tokens to also expand it into stable coins. So a busy roadmap for the future. Ian, on your side, you joined the TFD initiative over the summer, and the initial transaction was performed in September, and I understand now you're working on additional transactions, or you have completed additional transactions. So what are you expecting as an originator from those product developments performed by Tradeteq and XinFin?
Yeah, so the ambition, André, as Bill and Nils have said, is to grow the funding line. So we have completed, which is the most important thing to do, is to do one transaction end to end, which we did in September, and that's a proof of concept POC. So now we need to build on that. I mean, one of the interesting challenges will be the regulators' ability to keep up with the technology, because I think probably the technology is ahead of the regulators. So that's going to be a challenge in the market. Obviously, from an investor perspective, regulatory oversight will be a requirement in most, if not all, jurisdictions, and obviously we would want that as well. So I think the ambition in the next 6 to 12 to 18 months is to grow a line into the millions. As you know, André, we have an exclusive contract for the first $1 billion of debt with Nils and Billy. I'm only joking. So look, what we want to do is to make this meaningful. You know, so we need to get it into a funding line that has millions in there, and again, that's not a major step. We need to make it multi-client, multi-asset, and again, with the TFD initiative, there's going to be continuing trend to obviously electronic data, digital data, and that makes our life easier, because again, one of the challenges going forward for us, it's interesting, in the originating market is, you know, fraud is going to become as big a risk, if not a bigger risk, than credit. So that's part of the importance of the TFD initiative in terms of facilitating us to minimize the fraud. You know, compared to 5 or 10 or 15 years ago, fraud is coming up as a significant risk factor. So I think the ambition, to answer your question, in the next 12 to 18 months is to make this meaningful and relevant. And, you know, we would be targeting to get it up to, on our own basis, you know, a 5 to 10 million line. And then, you know, that's still a small percentage of our overall funding requirements. but then that proves, and then I think it does need to go to fungible at some point, because this is going to make it easier to manage. So that's going to be a key aspect as well. And then yes, and then I think all the other options are there, because they're just small iterations after that.
Yeah. Okay, may I ask whether your clients, the SMEs or the buyers of those SMEs, are actually seeing the difference, whether you're getting your funding through tokens or through notes?
So they're agnostic, like any SME and its principles. They just want the cash. So and that's fine, and that's the market we serve. But what it does do, it gives us better incremental access. So again, in the medium to long term, I think that's also going to be important. So we won't have to bite off, funding requirements in large blocks as we currently have to do with institutional investors. We can increment over a growing period. So I think from our end clients, they'll be largely agnostic as to what's going on in the background. But for us, in terms of flexibility and transparency and some of the issues I was talking about earlier, we think it's a critical part of the future. Hence we are really, really very happy to be part of this initiative and see it just growing over the next 12, 18 months.
Okay, very good. So at this stage, I'd like to take some questions from the audience, and some have been quite busy here on the Q&A chat. One question for Billy: what role will XDC play at the center of these initiatives? I think we already covered that. Are you leveraging R3 Corda to achieve these medium, or is it solely done on the XinFin network, in particular for this collaboration with Tradeteq as part of TFD initiative?
So what we did with this particular transaction was using the XDC network. And as far as Corda goes, we work to interoperate with any blockchain or technology that's available. And we have long had a goal of interoperating with Corda. And that's something that we've been working on. And as of sometime, I think in the fall, I think in last year in March, or I should say the spring, I'm sorry, we had actually integrated with Corda, and XDC is actually a live token that can be used for the same purposes on the XDC network, on the Corda network, so for liquidity and trade. So we can transact anything that happens on the XDC network with the smart contracts platform. We can customize that, and we can operate through Corda as well. We do have an initiative right now that's going on for ISO 20022 for messaging, on Corda and using the XDC token and trade as needed. So the opportunity to operate on Corda, similar to what we're doing here, is right in front of us. It's just a matter of preference, I think. We do have a number of people. This is not a new question for us. There are others who have, I know, especially in Europe, Corda is a network that's really being looked at as, the key to moving forward with financial transactions. And so we can operate in there just the same as we do with the XDC network. And we have not made specific plans with Tradeteq to do that, or to have the smart contracts platform, running on there. But we're with the technology, we can make that happen.
Yeah. Okay. So indeed, it's all about bringing smart contract technology and funding to different networks, and Corda is another one. Next to Tradeteq. Nils, on your side, you're an expert in notes issuance and repackaging. You see now this you have integrated tokenization option now. How do you see the different investors going for the one versus the other?
Yeah, the notes and also this first token are very much focused on the qualified investor market. So this is strictly a product for qualified investors. And by nature, while they are very large qualified investors, we work with some of the largest asset managers out there, issuing notes to them on a weekly basis. While they're very large players out there, there is a much wider market that should and is in fact interested in trade finance, because these underlying assets, if you pick the right assets, if you pick the right originator like an accelerated payments who have quality assets to deliver, then this can be a very good investment for a much wider group of people, retail. And this is where we see this headed, that you generate these additional benefits, additional access to liquidity for the corporates by giving a wider audience the ability to invest in the real economy, to invest in global growth. And the tokens are an excellent delivery mechanism for the points that we discussed. And so this is the other investor group we're seeing, and it's something that we're at this point actively working on with Billy and the team. And we'll have an offering that should be very attractive for that market in short order.
Okay, so I understand initially Tradeteq and TFD initiatives focuses on bridging trade finance with qualified investors on the capital market side. So those liquidity providers that are not active in trade but wants to get exposure and some yield on the trade asset class. And now with tokenization, you're extending that to non-qualified investors such as retail, in order to get even more liquidity and provide even further access to additional types of investors, could be retail or family offices, to assets originated by large banks or by specialized platforms like accelerated payments. So in that case, notes and tokenization, do you think that will coexist, or will will tokenization completely replace notes in the future?
I think it's additive or maybe even synergetic. There be always an investor market for the notes, and the notes are attractive for investors that understand how to buy fixed income paper, that understand how to buy a bond with an ISIN that settles through Euroclear in their custody account, but that do not necessarily have experience with trade finance assets per se, with receivables, with payables. And those are typically pension funds, insurance companies, larger family offices, but also corporate treasury. So we see really a move there. The corporate treasurers are using trade assets as a diversification on the short end of the curve as a yield pickup versus comparable paper. And for these types of investors, it's important that they can buy these assets like they would buy any other bond in the market, and that it settles the same way. For the wider audience, for the retail, the tokens, and they might buy tokens as well. And I think there is definitely demand, but where the token then really gets interesting is where you can go into a much broader market as well. So I think there is a definite place for both, and will be growing both equally.
Okay, very good. So how do you see, Billy, the community expanding and the liquidity you can offer through XinFin expanding as Tradeteq connects with more originators?
Well, I think it opens up the market significantly. We do talk about the participants in the marketplace. I mean, the investment side with what is going on in the retail market, I think makes it much simpler for a lot of people to come in and participate on that side. And I think that, for a growing community, like the XDC community, the XinFin community, I think that there's a lot of, we do have a lot of people who have come into the retail side of crypto who, are looking at opportunities to take part in DeFi solutions. And this is really an extension of what a DeFi solution is. The challenge, of course, being, as Ian was talking about, is, what happens with regulatory and how these things can really work in different markets. So if you're within a particular jurisdiction, you have a much easier time being able to participate on that funding side, as opposed to some that you just can't operate or participate in it at all. So I think there's really we're really far ahead in a lot of cases from the technology side of where we are comparative to the regulatory piece. And there's a lot of really smart people who are working on that and trying to make that happen. But we're really working within I think, or I should say that the real opportunity for those that are within the community or within the retail side, there's a real opportunity to come in and participate if they want to, in some of these opportunities that are happening. And that's, I think, only going to continue to grow. And with that, that makes it a lot easier for, the funding to be available. Because one of the things from an SME, and I think actually, Ian, you said it really well, which is the business only cares about getting the money. They need their cash flow in order to operate their business. And I think the greatest thing about what we're really creating here is, the opportunity to really open up that funding pool where it's hopefully becomes a lot easier for SMEs to really operate. And I think, invoice financing, the invoice itself or trade finance, it's a very, very stable facility for somebody to come in and invest in. And so it's a great market for that. And so we're really looking at, how we can continue to grow and create opportunities for people to come in and participate.
Good. I'd like to ask Nils what we can expect for Q4, because in Q3 we saw XinFin joining TFD initiative. We saw the first transaction with Ian's team. What can we expect for Q4? More transactions with accelerated payments? I think we already got confirmation from Ian on this. Are there more originators? That's a question from Rafi Komar here on the chat. We can expect this quarter?
Yes, absolutely yes to all of that. I think for us, the key is growing this, and I saw the question about the originators, and I think that will be part also of the answer to what you're asking, André. Yes, we're working with many originators, and in order to really make this scalable and also risk diversified from an investor perspective, we need to tap into multiple originators, and this is where it really becomes attractive then for everyone using this, because you will have access to a large set of underlying corporates, underlying invoices through a number of originators, and those can be non-bank originators, but also bank originators. There's no reason why it wouldn't work there equally. So growing both sides of the equation is extremely important, and that's what we're focused on at the moment.
Okay, very good. So it's not a one-off announcement that will fade away. It's a first transaction we saw in September that will be followed by additional ones. I'm checking the questions.
We did additional ones,
yep.
So we're already past the one-off. So I think this is growing, and I think that's really a point to make. You'll see a lot of announcements in the market and a lot of noise being created around things that then fizzle away, and they're a one-off and sort of the one firework and that's it. This is not what this is. We see really this as a key tool in our arsenal and in XDC's arsenal and accelerated payments arsenal, and then working together we'll be growing this also with others. But this is equally to the notes that will be a very, very important tool. And I think the notes, when I first started talking on panels like this about notes and capital markets, there were not too many people who understood what I was going on about and why SPV and all these things. Now it's absolutely standard. Distributing trade finance to the capital markets is not a novelty anymore. People have realized that that is a very important route to source liquidity, and the same will apply to the tokens that are actually, think about it, just a different delivery mechanism.
Yes, and talking about this new delivery mechanism with the tokens and the frictions that enables to remove, do you see, Ian, an opportunity here to offer more yield to your investors when offering transaction through tokens versus notes?
So I think
from the frictions, I mean, really from the frictions being removed, is there a financial gain?
Well, I think, look, like anything, Andre, where you have efficiency, you have the potential to turn that into a better yield or a better margin. My experience is that as you grow the market, yield may go down rather than up, but you're making it more available to a considerably wider audience, and you're putting better security in place, better transparency. And I think one of the things we haven't talked about yet, it's, why is receivables or trade finance one of the last areas, to be connected in a global way into notes and other types of funding mechanisms. I mean, we really operate a kind of a spot exchange. Our book spins every 42, 45 days. So there's a lot of complexity to tracking that and keeping on top of that. And again, the TFD initiatives in terms of will make a significant supporting mechanism for getting the efficiency into that. And then, as you say, those types of efficiencies and transparencies will ultimately lead into pricing, however that, but it also creates something that's sustainable in the long term, and we think that's very important. So one of the things we're seeing is just being significantly more efficient, taking paper out of the system, taking manual processes out of the system, and minimizing fraud, and that will lead to better and more competitive pricing, however that ends up in terms of who gets the margin.
Yeah, but definitely more efficiency for the whole market. So making trade finance even more attractive to funders, basically.
Yeah, because our book, it's not a mortgage book, that is reasonably stable, predictable. It's a book that as I said, our book is on average 42 days. And it completely changes every 42 days. It's an entirely new book.
Yeah, and I think that is often misunderstood and underestimated in terms of the complexity of the whole process, the reconciliation requirements, the settlement, and indeed the fact that given sometimes the low value of each individual transaction, you really have to try to remove any unnecessary costs through technology, and that's definitely indeed what we are aiming to achieve and already achieving with the TFD initiative. Bill, I see another question, maybe not directly related, or maybe you tell me, can XinFin support CBDCs?
Yes. Simple answer.
Yeah.
So,
and how would you see this? Because CBDC is a hot topic for central banks, at least. How do you see? Is that another source of liquidity that could be used? It will be an on-chain, obviously, liquidity. Can investors then, whether they are institutional or retail, use CBDCs through the XinFin network to tap into the trade asset class?
Yeah, I think all of that's definitely possible. The development of CBDCs, there's a lot of work that goes into that. That's really kind of outside the scope of an example of what we're doing with Tradeteq, but it's something that's definitely, on the purview of the network itself, that we can actually launch them and support them. So I think that this is one of those things that as the system develops, it's a kind of, in a way, it's a lot to answer, because there's so much that happens in the development of what we're trying to do on the technology side. And again, how that works within, regulatory, and where we could really kind of start the process to combine the two and bring them together. And so the technology is there, the ability to do it is there, the people to do the work is there. And it's really similar to what we've been doing with Tradeteq, which is really looking at, well, how do you build out that particular part of the ecosystem and bring the market players together, and then kind of maybe cross-pollinate what you're doing with CBDCs, with the trade market. And so it's an exciting path to take, and it's also one of those things that I think has to kind of unfold as you start getting there to see how it really can all come together. But everything as far as ingredients are there to make it work.
Thank you. Nils, I see a question on the volumes of transactions. How many transactions can be handled on a daily or weekly basis? And what kind of share of the market, the 19 trillion, if we consider documentary trade and open account trade, we should get to 19 trillion, are we looking to tap into?
Yeah, if you think about trade asset distribution, you'll see that, well, asset originate and distribute, the originate and distribute model in other asset classes is very established. Think student loans, credit cards, auto loans, mortgages. It's basically what finance providers to the end user have done for decades now. But trade finance, it's a relatively new concept. Many banks are just starting or have recently set up distribution desks, I would say, over the last 5 years. And with increasing regulatory pressure, more requirements to make the balance sheet work harder, do more with less, banks are now looking at this really as an option to generate and boost income and reduce regulatory capital. And likewise, non-bank originators have in the past typically funded themselves with a close circle of investors. Some of the digital platforms then started reaching out to more hedge fund type investors, but it was still very concentrated. And with the advent of new technology and the ability to tap into capital markets on a much wider basis, this is changing. And not only are banks starting to distribute much more than they did in the past, but also so do the non-bank originators. And these tools that we're building, be it the notes, be it the tokens, really help to fuel this growth, and they're vital to this. And that's the great thing about using technology. There is a clear limit on how many spreadsheets a single person can process in a day, and how many calculations on a little calculator someone can do. But there is no real limit on using technology such as the one that Zinfin and Tradeteq is providing.
Okay, very good, very promising. I think we have a final question for Ian. Can the tokenization of receivables be facilitated by a standardization of the way invoices are issued, like creating an ISO process for invoice issuing?
As I understand, that's been tried before. So I think ultimately the issuing of invoices, or purchase orders, which is just the reverse of an invoice, will become standardized over time. I think and we're already seeing, even in the market in the last 4 years since we commenced trading, our ability to access data in the cloud has significantly improved. Through common access APIs in the UK, banking data, receivables data is available at a click. So I think in terms of having the need for a standardized format is becoming less and less, because you can get access to the raw data. So it's a really interesting question, to answer, because it's changing so quickly, and there are now significant third-party providers. We don't see the same trends yet in the US and Canada. We think Europe is probably ahead on the curve in terms of that whole space, in terms of access to banking data, receivables data, payables data. But it's going to come. So I'm not sure there will be a requirement for a standard format, because we can just access the raw data in its raw form in the cloud.
Yeah.
Yes,
Can I make
Eric?
an observation, André? Because I wear sometimes
Sure.
different hats, of course, but I'm also involved with the ISPA, which is the European e-invoicing Service Providers Association. And indeed, there is already quite important standardization. There is, of course, the European norm for e-invoices. So in a certain way, I don't think that should be the biggest barrier. And when I look at interoperability that is taking place in terms of exchanging invoices between trading partners based on that European norm, this is really already quite a standardized environment. So what is interesting is to link also that part of the procurement side with the financing side. These should talk more often together, I guess.
But indeed, there is a tendency on the trade finance banking side, really, to always refer to standardization as a solution to doing more. And I really want to highlight what Ian just said also, that often you don't need standards to access the raw data. Once you have the raw data, you have the good contractual framework. That data is just good enough, whether it's on a proprietary format or on a standardized format to be processed, such as approving the invoice, funding the invoice, and so on. So standardization is sometimes, in my personal view, often abused by bankers to do nothing and wait before engaging in any innovation, whereas actually much can be done, as accelerated payments is demonstrating, with or without standards. So I hope that is answering the question of Laurent, who raised that on the chat. I think we have just a final question, if Eric allows me, to get to the maximum time allocation. It's one from David, I see, for Bill. Is the main source of liquidity for XinFin viewed as being created via exchanges, or are there other approaches being considered?
Well, exchanges are a big component of what we're doing around liquidity. Exchanges and market makers go hand in hand. So, we're always looking to, expand, the exchanges that we're on, and, the liquidity within the market. That's important component for Tradeteq and accelerated payments and others to be able to operate on top of the network, and that's really been our focus around that as far as liquidity. And there are other ways, and obviously the trade itself creates liquidity in the marketplace. And so I think there's a combination of that and other factors, but I think those are really the key to what we're trying to create.
Thank you. Thank you very much, Billy, Ian, and Nils, for sharing your insights on this. It's great to be talking about real life testimonials and new capabilities. I also like very much the way the blockchain technology is actually combined with traditional technologies. So we don't need everything on chain in order to benefit from blockchain, because as Ian highlights, accelerated payments is using various mechanisms to get access to funding, and the tokenization is one out of various options. And often we hear that blockchain is a completely different world, and we need to move to that world and move everything on chain. And here we're demonstrating that indeed the hybrid approach of combining an off-chain solution on the origination side with a hybrid also distribution solution off-chain and then on-chain for the final steps to get access to the tokenized funding, if I can put it this way, is definitely very, very effective. So I hope we have answered most of the questions, and if not, we will be available for additional sessions via the World of Open account. Always a delight to be working with Eric, and I was particularly excited to have such a panel of experts today to offer to our audience. So thanks again, Nils, Ian, and Billy, for your time today and for sharing your expertise.
Thank you, André.
Eric?
Very enjoyable.
Thank you very
thank you.
much. Thank you, André. Thank you, panelists. Thank you, Nils, Bill, and Ian. Thank you, of course, the attendees. This is also a recorded session, so it will be made available. We will have quite a number of new initiatives next year in World of Open Account. We are thinking about innovation briefings, a number of new initiatives, and I'm certain that the Alternative Finance Lab that is being chaired by André will be a lot active next year as well. So thank you all, and have a nice end of the year. We're almost there. Huh? We are almost in December. So, all right. Take care, everybody.
Thanks, everybody.
Thank you. Take care.
Bye-bye.